I hope you guys doing fine. I hope you're doing wonderful. Uh, this going. This is a brief for the dollar. I decided lately just to only trade the USD with a little fluctuation, easy to manage, better than anything else. And forget about the equity market, forget about the gold market. Just focus on USD and try to make money. So this is the USD in the weekly time frame. So what do I see here? I see a broken trend line. So that's not good, but it doesn't mean the end of the world. Okay. I see a bearish engulfing. It does not mean the end of the world, but it's bearish. What I see here bullishly is the MACD crossover still in the bullish mode. Usually, sometimes you have one last push before you go up. This happened many times before, such as this one in September 2016. So it is possible that we are in a similar pattern. Good deal. So this is the weekly time frame. Let's look at the daily time frame. So I'm putting here places where the buyers gather and trying to make a bullish case for an entry with lower probability of losses and higher probability of gaining. So I assume in this endeavor, this is A and this is B, and we're looking for C. We broke down right here. So to assume that C already concluded, you assuming that you did a Fibonacci extension of 127, even though the low was 9017. So it's a zone, it's an area, it's not an exact number. So this assumption here that we already concluded, okay? So if this is not the case, we go for 138% Fib retracement, which means 9008. 150 Fib retracement, 138 Fib extension. This is the number. 150 Fib extension. This is the number. 162. This is the number. Okay, so I discussed 1A, B, C, and places where the buyers gather. So it's not only Fibonacci extensions over retracements, it's where the buyers gather. So another area for the buyers is 9014, which is close to this area. That's a good case for the conclusion. Okay. Another area is 8967, which is close to the 162 Fibonacci extension. So if we conclude it at this level, you do a very, very reliable 162 with a price memory that proved itself in the past and produced an amazing 3% rally in less than a month. So the most probable number is this extension that comes with this price memory. Good deal? Good. So we talked only about the extensions and price memory. Now we talk about another area where the buyers gather. It is the Bollinger Band, the end of the Bollinger Band. So what's good about this Bollinger Band? It came with positive divergence. Okay? This supports the chance, the probability that this is a tradable bottom. How many times it happened in the past? Last time such thing happened, the RSI, you have a lower low in the RSI, higher low, and positive divergence with the Bollinger Band. Good? Beautiful. This time it was a mini one, low, low, lower low, higher low. Does positive divergence work? I really do believe so. Some people don't believe in that. It is their prerogative, it's their life, and I think they are wrong based on historical performance. So what other bullish divergence is here? I could do the full stochastic with the Bollinger Band. So we have one bottom. I'm looking at the stochastic now. Low, higher, low. I think the 35, this 35 number at the open on Monday, it will go to maybe 27. So you have a low, higher low, and by Monday it's definitely 100% it's a higher low, assuming it's not gonna continue going down. Even if it continues going down because it's a lagging quantitative calculation, so it's going to take some time. So definitely it will never ever go below this one by Monday, because the formula does not support that one day lagging numbers to go all the way. So you will have a low, higher low, and a higher low on Monday. Okay, so and the price action low, higher low, lower low, sorry, and lower low, 3 lows, 3 higher lows. Last time this happened, you have a low, and you could assume this is a higher low, the whole thing. So a low, lower low. Is this significant? Definitely. If anybody says otherwise, I could look historical performance, and you can see otherwise. So if we bounce from here, we're assuming 91.16 at least. Okay. So I discussed Fibonacci extensions. I discussed Bollinger Band. I discussed price memory, which all suggest we are very close to a tradable bottom. Okay, this is my own Elliott Wave assumption. I don't need to do Elliott Wave now a lot, but sometimes I use them. Okay, so assuming we concluded 5 waves down, we did, I made a mistake here, and I'm good enough to say I was wrong. I thought C would conclude at 95, but it concluded at 93.47. But the assumption of extended flat is still there. So you have 3 moves up, A, 3 moves down, B, 5 moves up, C. So assuming this is C, 5 and C, this might be later 1 and 2. 2 is the end of the correction. At the end of any correction in the past, you would have different divergences, either negative like you have here, or positive like you have here. Does negative divergence and positive divergence work? All the time, from my own experience. So you have here low, lower low, lower low, and now you have low, higher low, higher low. And what happened is a rally. And once you have negative divergence from here to here, you had a sell-off. You had negative divergence from here to here, you had a retracement. 1, 2, 3. So I know some of the open-minded guys would like this thing. Everybody should like that. It makes you confident of your own analysis, and stops the noise from the news. You know what I mean? And look at the RSI. Same thing. 1, 2, higher low, lower low. Same thing. Here, you have an equal low for the RSI, which is not always good. Let's look at the MACD here, just to prove that these divergences worked in the past, and I don't see why it does not work in the future. Okay. Okay, I don't have to speak. And definitely, 100%, we will have a higher low here if we bounce, because this is a lagging indicator usually. Okay, some people think it's not a lagging indicator, but it's a calculation of the past and assuming some different fast and slow moving averages, but still it can never go below this one by Monday. Good. So we discussed Bollinger Band, bullish divergences, and also Fibonacci extensions. Let's look at this one right here. So what do I see? I see positive divergences in both. So now we have positive divergences in both, in all MACD, RSI, stochastic, and very obvious ones. And they usually produce a bounce back. Let's look at historical things. So I'm trying to find bottoms based on Fibonacci extensions. So this is A, this is B. I'm talking about the late 2020, okay? And we found a bottom right here at the 127, at the 138 Fib extension right here. So if you think Fib extensions don't work, I beg to differ. Okay, so let's assume this is A, this is B. We found buyers at 138 Fib extension, and it produced a mini bounce back. Now from A, B, C could be 150 if we have a bottom. 150, we closed above the 150 Fib extension. Let's assume this is A and this is B, and 127 is I discussed earlier. I discussed this in the earlier chart right here. Okay, let's look at Fibonacci extension from this point to this high. We might go to 88% Fibonacci retracement, and this will be close to the, let's look at that one. This will be close to the 162 Fibonacci extension, AB. So that's another bottom. So in conclusion, I proved how the Fibonacci extensions and retracements mark a tradable bottom in the past. I proved how bullish divergences worked in the past. I proved that the buyer zone most of the times, all in the past, worked, and I cannot prove what's going to happen in the future, but trust your analysis and hope for the best. And please like if you like. Please don't forget that. Subscribe and share, and remember that this goes forever.